Good day, fellow traders. This is Roger Scott again from Market Geeks, and I have a new video tutorial for you. Before I begin, please don't forget to subscribe to our channel for new swing trading videos and trading tips. Almost 2 months ago, I created a trading video about determining market strength using simple visual analysis and trend lines. In case you missed this video, you can watch it on our website or YouTube. The video is called Range Bound or Trend Following, the best way to determine a trend. The video has been watched over 17,000 times in the last 45 days. This video takes you to the next step and demonstrates how to use visual analysis to measure relative strength. When I started trading, I wanted to learn the Holy Grail. I thought that the more complicated the strategy, the higher the odds that it would help me produce large profits. After some painful lessons like losing money, I realized that difficulty of a particular trading method has very little to do with the level of profitability that method is likely to achieve. Today, I'd like to show you a very simple relative strength method that works well and is extremely easy to utilize. Don't let the word relative strength intimidate you. It's just a term for looking at several related markets and seeing which one is stronger and which one is weaker. The key is to make sure there is a relationship between the markets. For example, related companies, currencies that trade closely, like the euro and the British pound, or exchange-traded funds that carry similar stocks, or different but related index contracts. What you want to find is two markets that follow each other very closely the majority of the time. In this example, I will use the two markets that most people are very familiar with, the two biggest indexes in the world. I will compare the S&P 500 with the NASDAQ 100 index. These two indexes typically have a correlation of about 85%. This means that they move in the same direction or follow each other the great majority of the time. These two markets are perfect examples of two related markets. Take a look at the chart of both the E-mini S&P and the E-mini NASDAQ contract going back a few months. You can tell by looking at these two graphs that the E-mini NASDAQ futures contract is weaker one of the two. This gives me a good indication of the relative strength of the E-mini S&P futures contract as compared to the NASDAQ futures contract. Notice I'm not using any technical indicators other than my eyes and the open high low close bar chart to see the price action visually. If I was to place a relative strength trade between these two contracts, I would simply purchase the E-mini S&P contract and sell the E-mini NASDAQ futures contract. Let's see how this would have worked out in reality. Take a look at both charts as they appear today, February 21, 2013. See for yourself how it would have worked out. You can clearly see from these two charts that the E-mini NASDAQ is dropping about twice as hard as the E-mini S&P futures contract. We simply combined visual trend analysis and took two markets that are related and compared the strength of one versus the other. You would simply go long the E-mini S&P and you would short the E-mini NASDAQ contract at the exact same time. You can apply the same method to related stocks or other related markets, but make sure your positions are of equal size. This is very important. There's a simple formula I will teach you in the coming weeks that determines how many shares or contracts to trade so that both the positions taken long and the positions taken short are equalized to each other, meaning you want to take the position that you are taking to the long side and equalize it to your position to the downside. You cannot simply trade one contract long and one contract short in this situation because two markets have contracts that are sized differently. So you have to equalize the position so that both contracts will be of equal weight. You have to do each time two separate positions in opposite directions, regardless of what stocks or other instruments you trade. You have to equalize your positions so that you are trading apples to apples and not apples to oranges. I'll be doing a tutorial on position equalization in the upcoming weeks. Thank you for joining us for today's swing trading tutorial. Please don't forget to subscribe to our YouTube channel for swing trading videos and trading tips, and visit Market Geeks to download your free swing trading report. Thanks for watching and have a wonderful day.